Kranti Batini, equity strategist at Wealth Mill Security, is here with us this morning. Kranti, good morning. Not much difference that we've seen from Infosys, even though results seem to be a little better than what we heard from TCS and Wipro, but markets not reacting favorably to what they are hearing on the IT front, a sector that we discuss fairly often. But again, IT sector not really living up to expectations, and many now saying that perhaps not living up to the expectations of India's AI boom as well.
Absolutely, Karthik. The results from the companies, especially for the Q1, the companies declaring, they're not enticing the markets at this point of time. That is the reason markets, if you see, they have been in a consolidation phase right now, trending at the 25,000 level range of Nifty. And due to the uncertainties, there is still the uncertainty is there with respect to the global growth and the companies increasing their budget. Still, there is a lot of uncertainty. That's where markets are still mulling at this point of time to take any big position in terms of the IT is concerned. The earnings season, mid and small cap stocks have been showing its resilience, and they're giving strong guidance. Whereas the bellwether companies are concerned in the large cap space, except a few like the banking space, HDFC, ICICI of the world, barring that, the remaining, the large caps are concerned in Nifty and the bellwether companies in the Sensex. They have been in a consolidation phase. The earning enticement is not coming to the market at this point of time. That is the reason what we are witnessing is very selective buying is taking place in the market, and markets are waiting for some kind of a strong positive news from this range.
Of course, markets are waiting for news which happens to be elusive, not coming their way. But look at the entire IT pack this morning, Kranti. Despite double-digit growth in net profit, at least for companies like Persistent and Coforge, and these are companies that you have been talking to us and, in fact, comparing them to the bellwether IT stocks and saying that these could be perhaps long-term bets for Indian IT investors. But even despite decent growth registered, albeit missing estimates, Persistent is down almost 7% in trade right now. Coforge is down about 5.5% or so. Overall, the entire mood on the sector, even the medium-sized IT companies, despite decent growth, are not able to entice investors at all. What seems to be the core reason behind that?
Yeah, one thing, Karthik, the buying interest is not coming at this point of time. Of course, we tend to see some kind of a selective buying here and there that do comes. But with respect to when the sector is in a downtrend, when the sector is going through a murky kind of a situation and kind of a turbulent time, so the by and large, the mid and small caps are high beta in nature. That's where we can see the mid cap names like Persistent and the other names like Tech Mahindra and other companies. Okay, they tend to get have that high beta nature on these companies. That's what we are witnessing. But Karthik, for a longer term perspective, if the investors have 2 to 3 years kind of a perspective, one can use this downtrend to cherry pick in this downtrend these companies in the portfolios, because these companies carries a strong business models. So any dip in this kind of companies gives a good opportunity once the cycle revives. Okay, these are the first companies to get benefited over a period of time. For some kind of a medium to short term, of course, this overhang is there. No fund manager until unless a fund is a completely long only fund who see some significant value. Okay, they're the first runners to go and pick up the stocks. Otherwise, slightly they're staying sideways with respect to IT is concerned.
All right, let's move on to another sector, Kranti, and let's talk about Tata Consumer, which again announced results yesterday. Decent guidance coming for that stock, but again, not really able to drive the entire sector. While Tata Consumer is up more than 1% in early trade this morning, the overall FMCG pack still seems to be fairly flat. Again, inflation is low. RBI bulletin suggests that India's fundamentals, the economic health seems good, but no momentum really even on a sector like FMCG right now, which is so intrinsically linked to inflation data, Kranti.
Karthik, you are absolutely correct. The consumer basket, especially the FMCGs are concerned. Look at levers returns in the past 4 years. They are not even, they are in single digit. But the consumption theme is quite strong in India. What we are observing, Karthik, there is a complete transformation in the consumer basket at this point of time, especially the FMCG ones. These markets are getting dominated, are their margins getting squeezed for a period of time. There are many regional brands in the unlisted space have been emerging at this point of time. The toothpaste, if you look at Colgate, the earnings are down. That doesn't mean that people are stopped using their product, or doesn't mean that people are stopped the behavior. But there are many organic, many regional brands are emerging, and they are slightly taking away their markets. People are consuming a tea, which is from a regional brand, which is more about a organic, the soaps. So those kind of themes are emerging. So especially except Patanjali, in terms of the stock performances are concerned, majority of these stocks like the Dabas of the world and the HULs of the world, they have been flattish in terms of their returns are concerned. So this is the significant change what we are expecting. But given the kind of the current, the downtick in the inflation is concerned, definitely for these companies, margins are expected to go up, and the disposable incomes are, as they are going up over a period of time, we can see some kind of a sectoral revival and increase of the margins for these companies in the next couple of quarters. So if the investor have a low risk appetite, extremely long term, one can try to pick up these stocks.
All right. And finally, let's also move to the pharma sector. Dr. Reddy's had announced his results yesterday. Mixed brokerage views on Dr. Reddy's, but despite an 11% rise in revenue, plus another spate of positive news coming with India and UK finally signing that FTA today, there is likely to be better momentum ahead for India's pharma sector, and drug makers like Dr. Reddy's as well as Sun Pharma and Cipla, all of them in the green this morning. But Dr. Reddy's expectedly up about almost 2% or so right now in trade, Kranti, but mixed view on brokerages, some saying that perhaps the guidance wasn't strong enough for the future.
Karthik, with respect to Dr. Reddy's is concerned, the stock is a fully priced in stock at this point of time. So that's where the market is anticipating a stronger guidance. As you rightly mentioned, the trade deals where India is trying to make, of course, UK and India trade deal is in the finalization phase. It can be signed today. So these the new deals where India is trying to make with the other regions, that also benefits the Indian pharma companies to market our products in those regions. UK India trade deal can be positive for Indian pharma companies. Majority of Indian pharma companies also trying to start their manufacturing plants also in UK. But the current trade deal can give some kind of a export free zone kind of a thing that will benefit these companies and increase their margins.
All right, Kranti Batini, thank you so much for all those details and for sharing your views on these particular sectors. As always, pleasure having you here with us on News 9.
Pleasure, Karthik. Thank you.